The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Let's go. Man, I've been blessed to come back here again and to have my show again. You know, no week is promised, no day is promised to us. So I'm always thankful that I can come back and talk to you guys. So today, man, it's been a wild, probably last 7 days, 6 days, 7 days since the last time I did my show. As I discuss every show, or while I'm currently coaching, is that I'm currently coaching my son in basketball. Man, my first year, man, right? So we entered the playoff season, right? Playoffs started last week, and man, we lost our first playoff game, and it was tough. The team that we played, we actually beat the brakes off of them, but they had 2 star players that were out, and I knew that we were going, once these players came back, I knew that we were going to have problems. So they did beat us, but man, it's double elimination. And we've been on a run, man. We beat we won our second game. We won our third game. Our third game. Second game. We lost the first one. Won our second game. Won our third game. And the team that we beat, man, my son got kicked out of the game on it. So they kind of beat us in the beginning of the season. Then we played them again, and they beat us. My son finally came back. And then they beat us by 1 point. And I was looking forward to playing them. And we beat them. We beat them by 2 points into the game. And then, man, as I said early on, maybe a couple of weeks ago, we had played the number 1 team, and the number 1 team beat us. They beat us like by 8 points. Man, I'm just happy to say that we are playing in the championship. Yes. Yeah, come on. Yeah, we playing the championship. Man. We are playing in the championship. We beat the number 1 team tonight, and I'm sorry I'm a little late. We had an 8 o'clock game. Had to get back here, set everything up, but man, it was a nail biter. But I had faith, man. One thing about being a coach, and man, I'm a man of God. While I was in there praying, like I don't know, I was like, "Come on, Lord, let us." Man, balls was going our way, man. They went our way today. And I can't be thankful enough. Like I said, I was, all glory to God. But it was a good game, hard fought game. The other team was good, really good. One of the players, in fact, we know one of the families. My youngest is really good friends with their youngest son, and they play a lot. And we've spent time with them. But they were on the opposite team today. And we did win, but they beat us twice. So it's hard to beat a team 3 times in a row, right? Especially me, I've been in sports for a while, and I know how to make adjustments. I know how to play. We played in numerous championships. I know how to play in championship games, and I know how to make adjustments. So if we were a tough out, right? My bigs were playing today. I mean, we had a game. We had a game on Wednesday, and we had a game today. And our game on Wednesday, man, we couldn't make a layup. Our biggest couldn't make a layup for save. We still won it though. We still won it, but we could have blew them out if we were making our layups. Probably missed about 20 points in layups. That it was that bad, but we end up and whatever. We end up winning, and man, we end up tonight. Our bigs was balling, and I said we would do for a big game from our bigs was balling. So man, I'm so happy we get a chance to play in the champion. This is my first year coaching basketball, so I'm kind of doing everything on the fly. I played basketball, after football, you pick up something competitively, and that's basketball, right? So anyway, all right. So let me get into the show today. We got a few things we're gonna get into charts. All right, we're gonna talk about war and conflict, right? War and conflict, and how to prepare our portfolios for if we go to war with Iran, right? All right. Second thing is we're going to talk about ASML, one of the companies that I like. Man, this has an interesting history. We're going to look at the heat map of the stocks that closed out today, and we're going to look at earnings. All right. So yeah, so let's get to it, right? Let's get to it. All right. So, and before we move forward, just ask you guys, please like, subscribe, and share. Please, I'm trying to grow my channel. I work hard trying to get quality information and get everything out to you guys so you can help you with your portfolio. I know time is, watch time is the new money, but hey, I do this absolutely for the NOLO. And but I really love what I do and I love giving information. And if I have it, I'll give it. All right. So let's disclaimer. All right. So this show is for information, providing the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial investment tax legal advice. The views expressed by the hosts and guests are of their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential of loss. Principal, past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. All right. So let's get to the next part of the show. So excellent, excellent, man. The stocks have been doing pretty well, at least the last 2 days. All right, so the Dow Jones closed today, Wednesday, February 25th. Sorry, kind of losing track of days. Today is Thursday, right? Wednesday. Sorry. Oh, I had a tough game. You got to give me a break today, okay? So today, Dow Jones Industrial Average closed at 307 points. S&P 500 closes 56 points on a positive, and NASDAQ up 288 points. And let's look at the Dow Jones Industrial Average. The low for the week was 48,785.72. I want you to remember that. Keep that for your notes. That's the low. We always talk about how the stock market is a time machine and it moves forward, it compounds forward and discounts backwards. So right now it's compounding forward. People have been positive last few days. President Trump just spoke, had to address the union, and a lot of things going on right now. So the stock market has been. I mean, things were looking bad the last few days, but the last 2 days, the market has been doing pretty well. So that's the low. So the Dow Jones, like I said, closed at 482. Man, we need to get that thing back up to 50,000. Right, we need to get it back up there. Of course, that's the all-time high, and who knows when we'll get back there. But that is the goal. The S&P 500 hit the low of 68.2326. Right now, 69. Man, we need to get that up to 7,000. I really had high hopes for the S&P this year. And I still have high hopes for it, but we haven't we hit that 7,000 mark and we've just been treading water ever since. All right. And then the NASDAQ. Man, the NASDAQ is looking pretty good, man. For the weeks up 500 points. And the NASDAQ has been getting hammered, um, especially due to the software stocks and AI's, I guess, entrance into doing a lot what these software companies are able to do. AI is able to uh, do this, and Gemini and Grok and all these other AI companies. So, but the Nasdaq closed at hit a low. I didn't write the low. Sorry about that. But closed up 499 points since last week. So I can definitely see that we have some momentum. Now I am still I'm still concerned about the market. As I went last week, I really looked into the charts. We look at the Nasdaq, and the chart did not look good at all. Right, it was hitting new lower lows. Now it just recently hit a weekly hit a higher high. We'll see if it will continue. But I'm just a little nervous about the market. But this may be an opportunity, but I'm treading light right now. I'm not in the market at all. I mean, I'm not heavily in the market. I mean, I'm always in the market, but I have not really put that many option plays in. I'm still just collecting dividends and kind of putting that cash to the side. I do have invested in some of funds, but majority of my investments have been into the indexes, right? And that's where I like to stay. When things, I can't really determine where the market, what direction the market's going to go in. I hide out. The way to hide out is in the indexes, which is the S&P 500 index or the Nasdaq 100 index, right? The QQQ or the or VOO, right? I like to stay there in those, and I just continue to buy shares of those over time. They do well, right? But I love to amplify the performance, amplifying the performance, the use of options, right? Or also we have dividends coming that'll pay us on a weekly basis, right? So that's how I see. So that's why we have the whole conflict and cash flow. All right, so let's get into it. Also in the news, man, we had some stocks reporting today, and one of the stock we're going to discuss is ASML. All right, it says chip company, and I'm going to break down this company for you. It's really they have a interesting history, and some, but Starbucks, GV, a lot of these companies are reporting today. Just for your information. Look at the heat map, and it showed like really performing in the market. Microsoft is up 2.9%. Google 0.64. Nvidia, which also reported positive earnings, and I think uh, Nvidia has been up, was up after hours. Let me just check that real quick. Should have put this on here. But Nvidia, Nvidia is really the catalyst to this whole AI revolution and AI stock market run. Wow. So man, it's after hours, it started really up, but now after hours it's only up 0.44. So man, we Nvidia is like a great company, but it's really hard in regards to earnings because there's such high expectations. I mean, I think they beat on both the top and the bottom. Uh, fourth quarter earnings. So man, they're doing really well, but you can't please anybody right now because I mean, the expectations are so high in the market. All right, let's move on. All right, so um, the uh, man, sorry about that. So when we look at the gosh, sorry, give me 1 second. When we look at the fear and greed index, sorry, my phone was acting crazy. When we look at the fear and greed index, we're at 46. I think was up 6 points. It's kind of a neutral area, and this is really just determined on the market. No one really knows which way the market will go, right? I mean, we have the underlying what we're going to talk about is the war with Iran and what's going to happen. So I'm going to show you, I'm going to give you an outline of what has happened in the past when we have gone to war in regards to oil-based countries. All right, so look, historically, Iran linked flare ups tend to hit markets in the same movie script, right? Stocks dip, first risk off, oil spikes. So oil has been doing pretty well, right? Especially last week, oil hit some new highs compared to the last uh, few months. Oil spikes, trade fear, disruption. Then stocks often stabilize, rebound unless the conflict creates a sustained energy shock, right? So this is what we have to look out for. Is it going to be a sustained energy shock? All right. So we got to prepare our portfolios for that. All right. So let's look at it. 1979, Iranian Revolution, hostage crisis. The main market channel wasn't war, it was oil, inflation, and the revolution disrupt oil supply and um helped trigger the 1979 1980 oil shock, right? Conflict pushes oil up. So look, this may be a great time to position yourself in some oil companies. I like Chevron. Chevron, I mean, I've talked about oil in the last few shows, but Chevron and Exxon. Chevron's probably my number one, Exxon's my number two. But maybe buying some oil stocks right now, right? They pay good dividends and you might get some upside if this conflict continues, right? So the Iran-Iraq war started, and I remember this. I was in middle school. Man, early fighting immediately lifted spot oil prices, reflecting supply risk and panic. Again, the equity impact was tied to whether the oil movie stated elevated to hit growth and inflation, right? So once again, it elevated, but then it just removed itself. The 2019 Saudi oil facility attacks, where Iran blamed by the U.S., Saudi in 2019. This was the cleanest oil shock weekend. Example, markets reacted hard to supply disruption. Reports note that a sharp jump in oil prices when markets opened after the attack. Saudi equities also fell in immediately aftermath, right? So this was another time when we placed oil and Saudi and Saudi Arabia. My cat is going crazy right now. What is going on? But this is it's another issue. So, but all in all, they all often recovered. But like I said, we're still in talks. You don't know if we want to go to war with Iran or not, but you might want to position yourself in some oil stocks, right? And maybe a way to generate some profit for you. All right. So the pattern is short, contained flare ups, usually a brief pullback, then recovery. Sustained oil disruption. Um, Hormuz, I can never pronounce this, but it is the channel that oil has to come through when it's coming out of coming out of Iran and Saudi Arabia and that area, right? So what happens is the conflict and they can stop the movement of oil in that area. So real bear market ingredient because it hits inflation, consumer spending. So if we do go to war, then you can expect gas prices, right? I've been through that. I remember, I can't remember which war was it, but the gas prices just started to hike. So this may be a great time for us to, like I said, position yourself in oil stocks and oil indexes or energy indexes. Energy spikes usually up when we go in war. And we don't know what's going to happen, but it's a possibility. All right. So those are some things to think about if we go into war with Iran. All right. So look, the company I want to get into is ASML. ASML and ASML has a great history. Okay, has a great history. Let's go into the history. Short history. ASML was founded in 1984 in the Netherlands as a joint venture between Philips and ASM International. It started in a shed. This company started in a shed. next to Phillips Building. Fast forward 40 years, it's now the most important equipment company in the semiconductor supply chain. This is, you can't make this up. This is amazing, right? And start a supply chain. The breakthrough EUV extreme ultraviolet, right? ASML is one of the only companies in the world that makes EUV machines, which are required to produce the most advanced chips. Think 3nm and 2nm. Each machine costs over $150 million and has thousands of components. And that monopoly position didn't happen overnight. It took decades of R&D and partnerships with chip makers and semiconductor manufacturer companies and Intel. So they combined with Intel and they created these machines. So you cannot, so when we look at a company, we want a company that's going to have a dominant position, right? And they have a dominant position because over 40 years, they started in a shed and they built these machines that cost over $150 million. So not only do you have to have the know-how, you have to have the capital, right? And that's why I love ASML. This is a great company that if you want to think about putting into your portfolio, it'll be outstanding. All right. So short analysis of the show strategic position. ASML isn't a chip company, it sells the printing press that make chips of AI, cloud, autonomous driving, military tech expands, demand for advanced chips rises, and ASML benefits upstream. Competitive moat. This is one of the deepest moats in the market. No real EUV competitor, high switching costs, long term customer relationships, and massive technological complexity. Right? As we discussed, hundreds of components cost $150 million to make this machine. So there's risk. There's geopolitical risk, export restrictions, especially to China. Matter ASML is directly tied to global tech tensions, but ironically, that attention increases domestic chip production in the US and in Europe, which can drive new orders. Financial profile, high margins. Think about it. A lot of people can't produce this. High margins, backlog, reoccurring revenue, right? From servicing. Install machines is not just selling hardware, it's building long term ecosystems. All right. Cyclical reality semiconductors are cyclical. When chip demand slows, orders slow. This is not a straight line shot. It is a long term infrastructure play on global computing power. And I believe ASML is going to be a great company, especially during this time. Now, if come tomorrow, next week, the AI whole hype is over with, then that'll be another thing. But right now, this is a company, specialized company, something you should think about putting in your portfolio, start building a position. Now, the pricey stock. I think the stock was trading like $1,400. But I think that this is a company that will perform over time, right? Um, and as trading has shifted right now from asset light to asset heavy companies, right? And I want you to understand the reason why they've shifted from asset light to asset heavy. The reason why, because when lenders think about this, when lenders look at lending money out, right? They often look at lending money on assets, right? So what happens is if the company goes out of business, the lenders are looking at, well, what can they liquidate to get their money back? When you have asset like companies, such as like a Facebook or with companies that don't really have a lot of hard assets, right? Then those companies, that's the reason why those companies aren't doing well, right? And also, there's issues with lenders, right? The people who are lending money to these AI companies are having. I think Blue Owl has blown up, and it is continue to blow up. They aren't allowing investors to redeem their shares. But what happens is that it starts off as a code, then everybody starts catch it throughout the ecosystem. And that's kind of reason why stocks have not performed, right? And why I'm a proponent of the Dow Jones, right? Because they got hard asset, and these are the things that's popular right now. Having hard assets was popular right now. All right, man. Thank you guys for coming to another show, man. I hope that I was able to provide you with some great information, man. I just coached uh coached us to the championship. And man, just wish us luck, man. Wish us luck. It's my first year coaching basketball. It is fun. You know, decided to I made my son say, look, we're gonna play basketball. You're not gonna sit home and just play video games until when we usually probably do spring football, flag football. But I think he don't really want to do that. And basketball is fun. He's my son is really good. He's really athletic. And he plays really hard. And man, he hit the winning shot, took it to the hole, got the and one. Now we need to work on his foul shot shooting, which is bad. But anyway, we took it home. Took it home. So wish us luck in the championship, man. Thank you guys for giving me a few moments of your time. And like I always say at the end, and investing is not a choice now, right? Investing is something we have to do. We have to teach our kids, right? And because of inflation and the price of things, it's, and you're going to have a job, and you're going to have an investment account, right? That you earn money from just to keep up, because the price of things continue to increase. We discussed oil. I think we're going to have some problems in the price of gas, which is a byproduct of oil. So I want you to get ready for these costs going up also. I gave you some plays on that, Chevron, but you got to start, preparing that for now if you want to make those plays. But man, I appreciate you guys coming. And until next time, man, stay fruitful. Thank you.
The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.